Hello, my name's Steve Walker from Promise Money, and I want to talk to you today about secured loans in 2023 specifically. As you'll know, the market went into total upheaval back in the back end of 2022 due to various economic policies, which took rates up in the air, which threw threats on the property market, all sorts of things went on. So where are we now? The good news is that the secured loan market is still as strong as it ever was, and it's really, really good for lots of purposes. But I could talk to you about rates, but they're changing on a daily basis. Yesterday we had two lenders telling us we're putting our rates up because we've lent too much money, and we had another lender telling us we're putting our rates down because we need to lend a little bit more. So they're all over the place. The key thing is, if you're looking at a secured loan, you need to be looking at it alongside a remortgage, because a secured loan is for capital raising. You want to raise some cash, which means a secured loan is also a second charge on your property, which means you've got a mortgage already. So you're either going to raise cash by an unsecured loan. I'm guessing you've discounted that because maybe you don't qualify, or it's over a short term, or it's really expensive. So you're going to remortgage maybe, or you're going to look at a secured loan. The key considerations there, before we get into the details of what products are out there at the moment, the key consideration is, do I remortgage or do I take out a secured loan? And to give you a flavour of some of the reasons why you might want to do one or the other. Let's say you've got a mortgage at the moment, and you're coming to the end of your term, and you can get a really great rate and borrow the extra amount that you want at that moment in time. You probably don't want to be looking at a secured loan at all, because a remortgage might be great for you. But conversely, you could be in a situation where you took out a fixed rate a little while back, you're tied into that, and there are high early redemption charges, early repayment charges if you pay that off sooner. So you might say, right, in that case, I'll look at a secured loan, I'll take that out until it's time to remortgage, and then I'll pay it off. So that's a good time where a secured loan could work for you. It could be that when you took out your mortgage, you got a really, really good rate, but since then, maybe you've changed jobs, or maybe you've got a little blip on your credit history, or something of that ilk. And if you were to remortgage now, you won't be able to get a deal as good as the one that you took out at the time. It could be that you're looking to borrow more, therefore it's going to be at a higher loan to value, so you couldn't get quite as good a deal. And in that sort of scenario, whilst a remortgage could be available to you, it might not be as cost effective as keeping your mortgage at its existing rate and borrowing a secured loan at a slightly higher rate. Because if you were to remortgage, you'd go from that rate to the rate on the mortgage, and you're paying the high rate on the whole lot. So if you've got a £300,000 mortgage and you want a £30,000 loan, you're better off to pay a slightly higher rate on the £30,000 loan rather than a higher rate on the whole £330,000. So keep that mortgage where it is. What's really, really important, if you are shopping around and thinking of taking out a secured loan, watch out. On the comparison sites, the way they generally operate is that if you say, I'm interested in a secured loan, they'll put you to a secured loan specialist. So all you're going to get offered is their best secured loan. You need to talk to a broker that does both secured loans and mortgages side by side, so they can say, right, if you remortgage, this is what it's going to cost. If you take a secured loan, this is what it's going to cost. What's important to you? Work out the pros and cons of each, and then advise you which is going to be the best and most suitable for you at that time. If you go to a specialist that just does secured loans, you're not going to get that. So that's really, really important. Anyway, I'm rambling on. I'm losing track of where I was. Yes. So you've got an existing mortgage, and you've decided that you've compared a mortgage and a secured loan, and you've decided which way to go, one or the other. But there might be an occasion where you actually can't get a remortgage. You might have got too much adverse credit for the mortgage market. It might be a loan purpose that they don't like. It might be a type of income they've got that you don't like. It might be debt consolidation. Mortgage lenders aren't really good at debt consolidation. Secured loan lenders really are. So it could be one of those scenarios where a secured loan is the only option for you. So that's also another important consideration. But like I said, the important factor that you do need to do is make sure that you deal with somebody who can compare both. So secured loan rates, where are we at the moment? Rates starting at around about 5.5. We're at the early part of the year, so rates went up. They've started to come down again, but I would. Who knows which way it's going to go? We could get another base rate rise, so they could go up again. Loan to values, well, you can actually get a secured loan up to 100% of the property value, which is pretty good. You're not going to get a mortgage for that, but you've got to bear in mind the higher you go up the loan to value curve, the more it's going to cost you. And whilst I'm not going to give you any advice, I would say that if you're getting up to that level of secured loan, then the rates, you're going to need a good reason for it. And it could be that getting that loan at a higher rate of interest, and when I say higher rate of interest, it could easily be, certainly as we speak today, current rates, it could easily be 10, 12, 15% if you're sort of 95 to 100% loan to value. But that might still be cheaper than a load of credit cards that you've got. And the problem with credit cards that you're looking to consolidate is you've got a payment every month. You've got that minimum monthly payment, which can really rack up. So by taking a secured loan at a high loan to value over a longer term, that could help you reduce your outgoings in the short term. But of course, the downside is it means you're paying interest over a longer period of time, which could cost you more in the long term. So it's a tool. Again, talk to an advisor. It's really important that you do that. So LTV is really, really good. Residential home, you can take a secured loan on your residential home. You can also get a secured loan on a buy-to-let property. There are secured loans which are really, really flexible. They're a bit like an overdraft. So rather than just saying, I want a £30,000 loan over 15 years and I'll pay it back every month and you get a chunk of money at day one, it's I'd like a facility of £30,000. But I'm only going to draw down £10,000 at the beginning, and I'll draw the rest later. And if I want to pay some of it back, so I'm not paying interest, then I'll do that. Now, that's great for business purposes or for people who need that flexibility to draw money down, pay it back, draw money down and pay it back without paying interest, only paying interest on the money that they've drawn at any one time. So like I say, it's like an overdraft, good product. What else can I tell you? No, there's really, the thing here is, if you want to know about secured loans, you want to know what's available, you've got to talk to an expert broker who does secured loans, not a residential broker who just does house purchases and knows a little bit about secured loans. Somebody does secured loans day in, day out. They've got direct access straight to the lenders. They don't go via a packager. I mean, we are a packager. So lots of people come to us and say, I want a secured loan for one of my clients because I don't have access myself or I don't understand them. So go to an organisation which has direct access to the secured loan market, but also to the whole mortgage market as well, so they can compare everything for you. You can watch as many YouTube videos as you like, but nothing's going to be personal one-to-one advice. And the important thing about that is, if you're wondering what a loan's going to cost you, you should be able to get a conversation going with an advisor, detailed fact find. They'll spend a lot of time with you. They'll go out to the market, find out what's available, and they'll give you some well worked out indicative quotes to tell you what's likely to be available and what's suitable for you, and that shouldn't cost you a penny. If you want to go further, if you decide to go further, well, that's when there might be some costs a little bit later on in the process, but it costs you not a penny to find out, so that's probably the way to go. This video will be out of date at some point, probably a week after I've given it. Something will happen in the market, but do please keep an eye on our Promise Money channel on YouTube, because eventually something will supersede this video, and if you want more information on specific areas about secured loans, there's loads of info also on promisemoney.co.uk, so do check that out as well, and don't forget to like our videos and subscribe so more people get to hear about them, and catch up with you again soon. Thanks a lot for watching. Bye bye.